Hello friends, this is GSCPA from beautiful Montreal, Canada. January is not just about New Year resolutions. It's the most important month to prepare for your taxes and your financial year. Today I will share 10 important things every Canadian taxpayer should do in January to avoid stress, penalties and last-minute surprises. Let's start. Number 1, organize your documents. January is the best time to get your tax documents organized. Create one tax folder, physical or digital, and keep any pay stubs, T4s, T4As, invoices if you are self-employed, bank statements, donation receipts, medical receipts, and other expenses. Simple example. In February, you meet your CPA. They ask, do you have your T4 or other T-slips? Do you have your bank statements? If everything is already in one folder, your tax return is fast, smooth, and tax-free. Remember, good records means smooth tax filing. Messy documents always lead to delays, mistakes, and stress. Number 2, review your last year's tax return. Before you think about this year, take 5 minutes to review last year's tax return. Look at your total income, which deductions you used, whether you received a refund or had a balance owing. For example, last year you only got a small refund, or you had to pay $3,000 or $5,000 at tax time. And that's a signal. It tells you maybe taxes were not planned properly, maybe deductions were missed, or maybe installments were needed. Remember friends, your last tax return is a roadmap. It shows you exactly what to improve and fix this year before it's too late. Number 3, check CRA and Revenu Quebec online accounts. In January, log into your CRA and Revenu Quebec online accounts. Take a few minutes to confirm your address is up to date. Read any notices or messages. Check installment balances if any. Simple example. Many people say I never received a letter from CRA, but CRA will say we send the message to your online account. If you don't check it, you may miss it and you may miss deadlines, and that can lead to penalties and interest. Important reminder guys, CRA and Revenu Quebec do not always send paper letters. If you don't log in, you don't know. Number 4, prepare your tax slips, T4s, T5s, RL1s, etc. In January and February, get ready for your tax slips. Employers and banks will soon issue T4 slips for employment income, T5 slip for interest or investment income, RL1 slips for Quebec employees. January is the best time to make sure your personal information is correct. Your name, your social insurance number, your address. Simple example. If your name or social insurance number is wrong on a slip, your tax return can be delayed or you may be asked for corrections later. Fixing mistakes early saves time and stress. So my friends, correct slips means faster tax filing, and January is preparation time, not panic time. Number 5, if you are a self-employed or run a business, January is the best time to review your income early. Do 3 simple things. Estimate how much income you made in 2025, review your business expenses, and check whether installments may be required. Simple example. Many business owners wait until March and then they say, I didn't know my income was this high. That's when the tax shock happens. If you review your numbers in January, you can plan installments, manage cash flow, and avoid panic later. So, mon amis, early planning prevents tax shock and waiting always make it worse. Number 6, review RRSP and FHSA strategy. January is the best time to plan your RRSP and FHSA contributions. Use this time to decide how much to contribute to your RRSP, understand if you qualify for FHSA, and plan contributions before deadlines arrive. Simple example, many people wait until late February or early March and then they say, can I quickly put something into RRSP? That usually leads to rushed decisions and stress. When you plan in January, you spread contributions comfortably and make better choices. So amigos, smart planning beats last minute panic, and RRSP and FHSA work best when they're planned, not rushed. Number 7, track medical, childcare and educational expenses. Many taxpayers miss deductions simply because they didn't track small expenses. In January, start tracking prescription medications, dental and vision costs, medical treatments not fully covered by your insurance, childcare and daycare fees. Simple example, one dental visit or a few prescriptions may not seem like much, but over the year, small receipts can add up to thousands of dollars in deductions. Now, here is a bonus point for students and parents: tuition credits. If you or your child is a student, tuition fees may create tuition tax credits. Unused credits can often be carried forward to future year, and in some cases, credits can be transferred to your parents. Simple example, a student may not owe taxes today, but those tuition credits can reduce taxes in future years if tracked properly. So friends, medical, childcare and education costs are often forgotten, but when tracked properly, they can significantly reduce your tax bill. Number 8, review rental or investment income. If you earn income from rentals or investments, January is the time to review everything properly. This includes rental property income, stocks or ETFs, crypto transactions. Make sure you track income earned, expenses paid, gains and losses. Simple example. If you rent out a basement or condo, expenses like interest, repair, insurance or utilities, property taxes, school taxes may be deductible, but only if you track them properly. For investments, selling stocks or crypto can create gains or losses, and CRA expects them to be recorded correctly. So my dear friends, investment income is not automatic, and proper tracking in January avoids problems with CRA. Number 9, plan for installments if required. If CRA or Revenu Quebec requires you to pay tax installments, January is the right time to plan ahead. Make sure you check your installments due dates, confirm how much is required, and plan your cash flow in advance. Simple example, some people receive an installment notice and panic. They go straight to the bank and pay without understanding it. But when you review it early with your CPA, you may avoid unnecessary payment or interest. So friends, installments are about planning, not panic. Planning ahead helps you avoid interest and cash flow stress. Number 10, last but not least, speak to your CPA early. Don't wait until March or April to talk to your CPA. January is the best time to have that conversation. In January, there is more time, planning is possible, and options are still open. Simple example, in January, your CPA can help you plan, adjust, and prepare. And in April, most conversations become, let's just file it. So my wonderful listeners, January conversations save money, time, and stress. Early planning always leads to better results. Friends, taxes are not just about filing, they are about planning. What you do in January decides how much smooth the rest of your year will be. When you start early, you stay in control, not stressed at the last moment. If this video helped you, like it, share it with your family and friends. Comment tax if you want more January tax tips. This is GSCPA helping you turn knowledge into real life results. Thank you.